Today's Wednesday, July 24th, and this is an end-of-day review on a position I took earlier this morning involving JP Chase, ticker symbol JPM, and as of today's closing price, the stock ended the session at $208.59. In overall trading, the stock price was down $1.74. So a couple of things. The red vertical dash lines are system-generated markers for expiration Friday for monthly option contracts. The most recent expiration was last Friday, July 19th, and the upcoming expiration is August 16th. The blue horizontal lines are, from my perspective, reasonable support and resistance levels. And the most relevant, from my perspective, are $213 and $196 down here at the bottom. So of note, JP Morgan stock hit a high, a yearly high of $217.56 back on July 17th, and since then price has faded to the downside. So this support resistance level, it's still unconfirmed because there's not much of a history, but I thought I'd just mark it up at this point. So what I've done is, just looking left, the stock price has rallied since end of April. So at that point, the stock price hit a low of $179.97 back on April 18th, and had since again hit that high of $217. So it appears that the current market structure is inside this ascending channel. So the upper yellow trend line is acting as another layer of resistance. The bottom yellow trend line is acting as another layer of support. And the dotted line is acting as both support and resistance as price is ranging sideline to sideline inside this uptrend. And clearly, right now, price is at the upper half of this range. However, heading into the August expiration, it's possible that this dotted line, if it will continue holding as a strong support level, has to cross over what potentially could be a strong resistance level. So I'm speculating that heading into the upcoming August 16th expiration, it's possible that price is going to get squeezed. And it's possible, considering the volatility in the S&P 500 in the past 2 days, it's possible this move could eventually lead to a pullback, possibly price falling below this yellow support level and ultimately retesting the support level of 196. So I thought I'd participate on this potential pullback via option contracts. I didn't short the actual common shares. So as the stock market opened this morning and started trending higher, creating this long wick to the point that price hit a high of $212.03. As price was trending at the open, I started taking a short position. So at this point, this white line is just a visual markup as to where I took the short. And the details of my contracts involves the August 9th expiration, a week before the monthly expiration of August 16th. And relative to the spot price, I selected the $200 strike price. And as a buyer of option contracts and bearish, I'm on the put side. So essentially what the contract is saying is that on or before the close of August 9th trading session, I'm speculating that JP Morgan Chase stock will be at or below $200. Again, because I'm speculating that there's going to be a potential retest of this support level here of 196. So with all things said, switching over to the trade tab, right here under the option chain section, there's a flag position pegged to the August 9th expiration date, exactly what I mentioned in the chart before. These contracts will expire worthless in 16 days. Now, down here at the bottom of the details, so I picked up 4 contracts as, again, the general trend is to the upside. I thought I'd mitigate the risk with a small position. So I thought I'd just pick up 4 contracts. My entry price is quoted at 55 cents. And since I entered the trade, the position is in my favor as it's now quoted at $1.02, and the overall profit and loss side of the ledger is reflecting a positive balance of $189. And if I click on the trade confirm, I started taking this position literally at the open. I picked up the first 3 contracts 1 minute after the stock market opened, and then I added that 4th contract about 15 minutes later. So just to clarify the valuation on these option contracts, the 100s, right? Each of these expiration dates has 100. The 100 represents the number of shares each option contract is holding. Now, as I shorted the 4 contracts, this is equal to 400 shares of the underlying security. So the multiplier is 100, right? So right here, my entry price is quoted at 55.25. 55.25. I need to multiply that by 100 for the 100 shares. So one option contract is actually valued $55.25, not 55 cents. So I picked up 4 contracts. At risk, not including commission, is $221 over the next 16 days for the prospect of price pulling back at least $9 to the downside. Now, the alternative was to short 400 shares. So using this closing price of 208.59, if I was to have shorted 400 shares, the margin exposure would have been over $83,000 over the next 16 days. So I thought it was more rational to trade the options rather than the outright stock. So that's the current status of this trade and my general thesis for a bearish outlook over the next few days. So for the purpose of time, I'll pause it here and I'll update accordingly. So a quick update. Today is Friday, August 2nd, and the stock market has been closed for a little over 5.5 hours now. But as of today's closing price, JPM stock ended the week at $199.14. And in today's trading session, the stock price was down a little over $8 per share. So from the daily time frame, you can see here that for the past 3 days, it wasn't just JPM stock, but the S&P 500 has been selling off the past 2 days. And we can see here that heading into today's close, price came all the way down, right? So market structure is broken because price fell outside of this ascending channel. And heading into today's close, JPM stock came down, tested the support level of 196. And as the market was closing, there was a bit of an end of day rally. And because there's only 5 days remaining for the life of these contracts, and for the fact that price was respecting this support level, I didn't want to run the risk of this entire drop reversing on me heading into next week. So I decided to close this trade out at a profit. So again, I had selected the $200 strike price. Today's closing price is below that. So I thought that was another reason to go ahead and close the trade. So switching over to the trade tab, under quantity, the position is 0, right? And again, there's 7 days remaining. And the closing price on the option contract is $3.37 or $337 per option contract. And the P&L is 0 as I did close this position out. Now, because of today's drop, this $1,200 was just from today's pullback. So I was able to close this trade out heading into the stock market close. And my exit price was at I'm just looking at my notes, $395 per option contract. So I was able to get out of this trade $60 greater than where the option premium ended closing at $337. So I think that was a good decision to close the trade. Again, this was the key catalyst, this 7 days, and of which 2 of those days are involving Saturday and Sunday. So there's actually less time involved. So what I'll do is I'll provide a breakdown and a screenshot of my option contract that I closed and the overall profit and loss on the JPM short. So good trade as well. And with the market pulling back, I do have other assets or securities to review. So until the next trade, I'll see you.